you watched his career. You watched Jack Bogle really take and make such a huge difference to the American public. What kind of sticks with you most about what Jack did?
Well, I did get to know him, Becky, pretty well back when I was working in the magazine business. And I wrote an editorial a long time ago in which I basically conceded the point, which is antithetical to us Americans, which is we never want to settle for average. But I came around to the thinking that average in investing, i.e. matching the market's return, was actually the best way to go. And so I conceded that point to him very publicly, and he became, and we became friends as a result of that. If a person is judged by the friends and company they keep, your tributes that you just mentioned from Warren Buffett and others, Larry Fink included, tell you basically all you need to know about Jack Bogle. If a man is also measured by the enemies he makes, Jack Bogle made some pretty good enemies in the mutual fund business, because what he espoused was not, as Jeff, you know, universally popular.
Yeah, Jeff, that's what I would pick up on. You know, he was the hero for the average American investors, but fees to Wall Street got slashed heavily. And Joe made that point earlier, too. What kind of difference did this make on Wall Street?
Well, I agree with all that's been said, both by the great Larry Fink and Warren Buffett comments and the, of course, even greater Tyler Mathisen recollections. But there were three pieces to his legacy that are important to separate. So far, everybody's talking about what he's invented in terms of the no-load fund, in terms of the index investing. And that was brilliant. And he really did bring capitalism to the common person. It was a fantastic revolution, controversial when he brought it out. But it's sort of a kind of a three-partite stand to this. There's a trilogy of qualities, because in addition to his contributions, which were enormous, revolutionizing investing, his career was a remarkable career as an entrepreneur, what he created, and then the idea of character is he understood resilience from adversity the way so few are candid with us. You might remember about 12 years ago, Becky and Joe, you were there. We brought him on to Squawk Box to talk about, for the first time publicly, all the failure in his life. And it was quite a moving time. He talked about his father having an alcohol problem after they lost the whole family wealth in 1929, talked about being fired, having just lost a pretty decisive vote when he was running an ill-formed merger when he was running Wellington, then to go off to steal the client base of Wellington, but then getting pushed out as he launched Vanguard to come up with reinventing himself again. And that resilience was remarkable. And Joe introduced him by drawing on the great Nietzsche quote, "What doesn't kill me makes me stronger," Joe, is what you'd said. And he said, yeah, that's true. He said, it's amazing how simple life can be when you're planning a life around not what could happen, but the reality of what you have. So I think on character, on contributions, and on career, he's been an unbelievable person.
You know, there's a delicious irony, Jeff, that you're there in Las Vegas. He always referred to the croupiers in the investment business, the people that raked off or skimmed off fees or charges or sales commissions from the individual investor. Another part of Jack's conceptual brilliance was this, and it's been sort of overlooked in some of the comments, because as we focus, of course, on no-load funds and indexing, that is what he will be remembered for. But it was also the structure of Vanguard that was so different, because Vanguard, unlike virtually every other mutual fund company, is owned by the shareholders of the mutual funds, not by some separate management company that controls the investment advisor, the distribution, the marketing. The shareholders own it. So the result
that's a great point, Tyler. That's so unusual, and that shows how, Tyler, how his character ties into both the structure he created, but also the idea of his contribution is by having this really owned, it's like a mutual insurance company.
Exactly.
Is that
Exactly. And this is the way he was able to drive down costs and keep them so low. And Becky, as you pointed out last evening, I heard you on Fast Money, the point here was that when you take very small percentage numbers measured in basis points, and you expand them out over the trillions of dollars that Vanguard has under management, the savings that accrue directly to the shareholders are billions and billions of dollars, and he put that money in shareholders' pockets.
That's his complaint. He said we have $30 trillion a year, back a few years ago, $30 trillion of trades taking place that do nothing to build wealth in the country, well, other than for a few individuals, in terms of really creating a great capital structure. He said it's waste. He said we only have about $180 billion of actual capital formation. All that's just going into the hands, he said, of transactions that don't need to be done. He's very critical of high-frequency trading, and I think that's a hugely important point. He was while he had an ego about his legacy, he was actually a very humble man. It's an interesting paradox is that with that structure, Tyler, he was only worth around $80 million or so when he passed away. What's Larry Fink? Over $1 billion this year, and Ned Johnson of Fidelity is probably pretty close to $8 billion. He could have been far wealthier than any of those people and almost any tech titan, but he chose not to. He chose to keep this humble. He said, pay for performance, not pay for peers.
And Jeff, talking about the tributes that are being made today, I wanted to show a video. We talked about this a little bit in the 6 o'clock hour. It was an emotional moment on his 88th birthday, a tribute and a surprise from Warren Buffett at the company's annual meeting. And I think we should roll that clip. Oh, apparently we don't have that clip ready to go.
We talked about it earlier. It was a tribute that he made in front of the 20,000 people or so who were in the audience watching the annual meeting for Berkshire Hathaway. What was so interesting about that was he singled him out after I think a question was brought up. He singled him out, called him out, asked him to stand up and said to the crowd that Jack Bogle had done more for the American investor than any person probably on the planet. And he also
that was a
wrote about
wonderful tribute. It meant so much to him. He was confused by the way his legacy is sometimes presented. You remember in 2013 when Bob Shiller, my colleague at Yale, won the Nobel Prize in economics. At the same time, Gene Fama of Chicago won Nobel Prize. Each of them was claiming a legacy, even though these guys are completely different from each other, is that he found the middle ground, but he believed in bubbles, as Bob Shiller, the irrational exuberance father. But he also he believed the idea of buy and hold somewhat the way Gene Fama did, except Gene Fama would argue it's an efficient market thesis, and he'd say it's not really efficient market EMT. We should focus on CMT, the cost of the market theory, was what he said. Yeah. We're paying for what we don't need.
You know what I would sort of not that we need to button it off, but I would button it off this way. He was a guy whose investment career dated back to the 1950s. But the modern word that we use to describe people like Jack Bogle is disruptor, and that is who he was. In the investment business, he was the ultimate disruptor, just like Charles Schwab became the ultimate disruptor. Right. He was not universally, he was widely respected, but not universally beloved for this and this fact alone. He said,
a disruptor with integrity. He was a big believer in the corporate governance reforms that have come out. And in fact, he served on some of the most important commissions of the day, is that he really thought we needed much more transparency. While, he was a disruptor like Elon Musk, he didn't have the character of Elon Musk. He wasn't out to deceive anybody. There was no cuteness that way. He thought transparency was fundamental, and humility.
He was fond of saying that we at Vanguard give investors a fair shake. Of course, implicit in that is that other companies were not giving investors a fair shake, and he would have embraced that implicit knock. He said three things. He said, my investment wisdom could be distilled onto a 3x5 card, and I'll give it to you here. One is own the entire market. You can't go wrong doing that. It makes you an investor, not a speculator. Two, don't just do something, stand there, do nothing, don't trade. It will affect your overall returns. And third, do it at low costs. You get what you don't pay for. That was the wisdom of Jack Bogle.
That was. I think his one frustration was at age, I think 65, he had a heart transplant of a 31-year-old, and he was arguing that they should start the clock over. Who cares how old your fingers are? He has the heart of a 31-year-old, but sadly time ran out.